This is what really happened in the car market in 2024 and what 2025 might hold. Welcome back. This is the first Classic Value video of 2025. It's been a while since we've done one of these, and it feels like the right time. I kept hearing people say on podcasts, on YouTube videos, the car market feels like it's flat, maybe slightly potentially down. It was all too wishy-washy. There was no data. It was all a bit soft. This video is here to fix that. By data and facts, what really happened in the car market in 2024 and what might happen in 2025. Let's get into it. So, what happened to prices between 2023 and 2024? This is just collector cars. This isn't your Ford Fiestas, your Ford Focuses, nothing like that. This is from auction results around the world, so sold verified prices. And here's what happened. Between 2023 and 2024, collector car prices were down by about 10.2% over that period. Put that numbers on that. In 2023, you'd be paying around $24,750 for a collector car across the board. This year, $22,200. It's a big fall. Worth mentioning though, that's not adjusted for inflation. Inflation globally is forecast to be around 5.2% in 2024. The UK is a little below, forecast to be around 3%. So you adjust that for inflation, your real terms fall of collector car prices is 13-14% year on year. I suspect the first question most of you will ask is why has it happened? And it's down to three main reasons. One, I label consumer confidence / political instability. As buyers and sellers, how much confidence do we have in the economy and the political systems that sit around us? Number two is interest rates. They've risen rapidly through 2022 and 2023. And they're starting to fall away again through 2024. More to say on that later. That's reason number two. The third reason is supply. Very simply, the number of vehicles being offered to the market has a big influence on prices. We'll dig into all three of those a bit more later on. I know a lot of you that watch our videos are fans of the classic car market specifically. So what's happened there? For this, any classic car we define as a rolling 40-year and older period. Just like the UK government defines them, it's a very similar story to what's happened overall. They're down about 10.6% year on year between 23 and 24. Highly comparable. We'll get into a graph later that shows you how it splits by decade. So that's a global picture. Prices are down about 10% year on year, whether it's classics or all collector cars that you're looking at. The interesting bit comes when you look at it on a market basis. So the UK, US and Europe, I'm talking here, there's three big car markets that we track. What's happening in those when we look at the price changes? UK and US are very similar. Both markets have seen prices fall about 14% between 2023 and 2024. Europe is the one positive market. They've actually seen prices rise by 14% between 2023 and 2024. And I know what you're all thinking. It's very weird they're all on 14%. It is very weird. I've triple checked the numbers. They're watertight. Don't fret. The second thing to say is more of a considered point, shall we say. You can actually look back to the three reasons we outlined earlier of why prices have moved and map them to the UK, US and Europe and explain why the prices have moved in the way that they have. It can be a little bit complex, so I'll try and make it as clear as possible within this video. Stick with me. Let's start with the US. Consumer confidence, political instability. What happened? Well, unless you were living under a rock, you probably realized there was an election in November. Trump versus Harris, vastly different policies. And regardless of your views on each of those candidates, one thing it did ensure was uncertainty. And what's one thing that markets hate? That's uncertainty. Consumer confidence-wise, this is downward pressure on prices. The second thing is interest rates. In America at the start of the year, they were 5.5%, and they've fallen steadily throughout the year, and they're now at 4.5%, so a big 100 basis point drop. That puts upward pressure on prices. It makes the cost of financing cheaper, and ultimately, people's mortgages cheaper, so they have more money to spend. The UK has followed a pretty similar path in terms of political instability over the year. We had the election in July. It felt like, and speaking to dealers and auction houses, they followed this view that people were sitting on their hands up until the election took place and the outcome was low. You also saw it through sell-through rate. In the run-up to that election, there was some really poor auctions when it comes to sell-through rate. After the election concluded, you started to see that sell-through rate climb as people became more comfortable, more certain about what the future held. However, the uncertainty for the majority of 2024 led to downward pressure on prices in the UK. Interest rates-wise, we saw a fall, but not quite as much as the US. So we went from 5.25% to 4.75%, so half the extent of the cut that the US had. I put upward pressure on prices, but not as much as the US did. So what happened in Europe, the only market where prices actually rose last year? Politically, it was a pretty quiet 2024. The first half particularly was quiet. The second half, there was some drama in France and Germany. France had its National Assembly dissolved, and the Prime Minister was ousted in November. or December, one of the two. Germany had its Chancellor lose a no confidence vote, and he'll be gone by February 2025. Now, while they sound like significant events, they're very different to what happened in the UK and US with their own elections. Elections are long-term planned. They're known often 6 months, a year in advance of when they're going to take place. That drives uncertainty. People can see that coming, they're aware of it. Europe was a different scenario. It was a faster moving picture. People didn't have these forecasts out for 6 months, a year in advance. As a result, it put less downward pressure on prices. There was still some, but less than the elections in the US and UK did comparably. Interest rates fell massively in Europe in 2024. They started the year at 4.5%. They finished it at 3.15%, the biggest fall we've seen on any of our core markets. Upward pressure on prices. Quick little interlude. Sorry for the interruption. If you're enjoying this video, perhaps you'll enjoy our app Drive, available on Android and iOS. It is the way to make your automotive life easier. Instead of trying to track all the auctions across the world, that's a faff. Come to the app. You can do it all in one place. You can see cars that are for sale and everything that's sold historically. If you've got a little collection, add them. We'll track their value, and every time one sells or is up for sale, we'll notify you straight in the app. Nice and easy. Back to the video. So what have we got so far? In the US and the UK, we've got politics driving prices down and interest rates driving prices up to different levels. It doesn't quite explain the 14% fall seen in both markets. In Europe, we've seen politics slightly drive down prices at the back end of the year, and interest rates massively drive prices up. That partially explains the 14% rise. The final factor is supply. This is what actually drove the majority of the price movements in 2024. When you flood the market with more vehicles, prices generally fall. So when you look at what's happened in terms of number of vehicles coming to each of those markets, the picture all makes sense. At the top level, 2024 has seen more cars come to market via auction than ever before. More than any other year in history that we tracked our data, 2024 has been the peak and by far. That, though, is primarily driven by the US. The US has seen 40% more vehicles be sold at auction in 2024 than it did in 2023. That is a bonkers statistic. And think about that. If you've got 40% more cars coming to market, that supply curve is shifting up, and therefore prices are going to fall. You've got far more options to pick from. You're not constrained in terms of looking for a vehicle. Instead of having 3 to look at, you might have 5 to look at. That naturally drives down prices and explains why the US is down 14%. The UK has seen a 2% fall in the number of cars coming to auction in 2024. So what does that mean? You've got driving prices down through the election significantly for the majority of the year. Interest rates have slightly helped, but they haven't been cut that much. And supply is pretty much the same as where we were last year. So you can see that political instability driving prices down there, your 14% fall. In Europe, we saw 13% less cars coming to auction in 2024 than we did in 2023. Combine that with some political instability at the back end of the year, albeit limited, big upward pressure on prices from the interest rate cut, and a massive fall in supply, there's your 14% price rise. Consumer confidence, interest rates, and supply, combine them all, and you can stitch a picture together of what's happening. Also, thanks for sticking with that. I appreciate it. It's a little bit tricky to follow. Some of you might be sitting there going, yeah, but Giles, the price falls within here are probably down to cheaper cars coming to auction, worse condition cars, less desirable cars coming to auction. And that might be true, but we can test that with our data as well. So here's what we've done for you. We've taken the 200 most popular models in our database, those cars that sell most frequently. We've looked across all of those and gone, what's happened to their price between 23 and 2024? Across the 200, 76% of those have seen prices fall over those 2 years. 76% of cars have fallen in value. The price fall on each of those, on average, is 8%. That's very, very close mapping to the 10% fall we've seen overall in the market. As you can see, actually, it's not just poorer condition cars are coming or cheaper cars generally are being offered. Rather, the intrinsic value on a model by model basis is falling. So what type of cars did perform well? There's a lot of depression in the market. Depression is quite a sad word. Maybe I shouldn't use that. There's a lot of prices falling within the market. So what is actually performing well? This chart is probably the best representation of price movements within the collector car market. What's it showing? It's showing by decade what's happened to prices of vehicles from the 20s, the 30s, all the way through to the 2010s. What's happened to the prices of vehicles between 2019 and 2024. And we call it the wave. Anyone who's followed our content for a long time recognizes this graph. And what's it showing you? It's showing the wave of coming below the surface starting in the 20s, rising up, peaking at the top of the wave, and then falling away again. And this wave is the best representation of this whole generational shift you'll hear people talking about when it comes to cars. It shows you that decreasing appetite for those sort of pre-1950s cars, increasing appetite for those from 70s, 80s, 90s, but also it's showing a fall around the 2010s. And this pattern of this graph, the wave, has been true for many, many years, and it will continue on. What is interesting though is when you cut the data slightly differently and look at the prices, not between 2019 and 2024, but 23 and 24, every single decade, as you can see on this chart now, has fallen in price. Let's dissect 3 of these decades and see what's going on. 2010s is probably catching your eye. It's down almost a quarter year on year. The majority of these cars are bought on finance. The majority of these cars are dependent on the interest rate being affordable. If interest rates rise, it makes the cost of borrowing more expensive, the cost to own and retain these vehicles more expensive as a result. While interest rates did fall in 2024, they were much higher than they were on average in 2023. And that's primarily the driver within this decade. The other thing that might catch your eye is the 1920s. They're the best performing decade in this whole chart. A majority of you will have heard the rhetoric around the dying demand for pre-war cars and how that generation is just passing away and moving on. When you look at the data, it doesn't always back up that story. Yes, prices have fallen a lot over the past 10 years, but when you look over the past 5 years, prices of the sort of cars from the 20s have bounced bang on between £15,000 and £20,000 year on year in that range. We're not seeing a sustained decline. They are bouncing around, perhaps stability for an end of the market that often gets bashed, perhaps unfairly. And the 1980s have seen the second strongest growth, albeit still price falls in this chart. Why is that? Very simply, it's those people who grew up with 1980s cars as posters on their walls, now have the funds to go and buy them. It is what drives that movement, that wave shape in the graph we showed you earlier. People buying cars that they love from their childhood, they love from their teenage years, they love from being 21 and seeing on the streets. That is what drives so much of collector car behaviour. So let's move on to demand before we wrap up and look ahead to what 2025 might hold. I've got 2 points to make, and they both revolve around the theme of stabilisation. First one is when you look at the prices where we were midpoint of the year, the first 6 months of 24 versus the first 6 months of 2023, prices were down about 13% globally year on year. At the end of the year, we've ended up about 10% down. What does that tell you? It tells you the back end of the year had a recovery, had a better performance than the first half of the year, hence why the price falls were a little bit less at the end of the year. The second point is around sell-through rate. This is the number of vehicles that go to auction and sell as a percentage. So if you had 100 cars go to an auction and 75% sold, sell-through rate 75%. I'm sure you all know that. I probably didn't need to explain it. I probably don't still need to be talking about it right now. And this chart shows what's happened to sell-through rate over the past few years. 2021, it peaked at 78%. 2022, it fell to 72%. 2023, it fell again to 67%. And the big question coming into this year, or 2024 rather, was what happens to that number? Does it keep declining? Does that trend keep heading downwards? Do we end up at the low 60s? The answer was no. We stabilised and ticked back up very, very slightly, 68%. Finally then, if you remember nothing else from this video, let it be these 3 things. Number 1, prices are back down to 2021 levels, near enough. Globally, we're down about 10%. UK, US are seeing price falls of 14%. Europe is up 14%. Number 2, falling prices aren't always a bad thing. Think about one of the big challenges this sector faces. How do you bring in a new generation with cost of living pressures into this hobby? Falling prices is a great facilitator of that, both for new entrants to the market who thought they were priced out and now actually can purchase, but also existing people. I can now afford cars I didn't think I could afford 2 years ago. That's great news. That keeps me in the game, that keeps me entertained. It's not always a bad thing. Third point, supply. This is the big unknown when we come to 2025, and this will be what decides what happens to prices in this year. If supply continues to rise in the US like it has, prices will fall again. However, if supply shortens and constrains, you're going to see prices tick up. If it remains level, I would expect, given the interest rates and political situation, you're going to see in most markets, prices actually tick up a little bit in 2025. Right, there we are. Hopefully you enjoyed this. If you do, give us a follow. Plenty more videos to come.